markets are all about psychology. And if everybody expects something to happen, it won't happen. Everybody's kind of got in their heads that the cycle finishes in December because that's what it did in 13 and that's what it did in 17. So my guess is we probably have a sell-off and then it rips again because that is the path of most pain. And markets tend to have the path of most pain. Why is it going up right now? Because the institutions aren't in and there's no ETF, so retail aren't in. So the path of most pain is it going up while people aren't in. But the path of most pain would be a bunch of people sell out thinking they're being clever and the market goes up. Why will it go up? Institutional adoption is not going away. The retail ETF is coming. It'll come out in the next couple of months. So we're going to broaden the access and we're going to bring institutions. Institutions tend to make asset allocation decisions by quarters. And my guess is January to March quarter next year, we're going to see a huge inflow because the ETF will be out. So pension funds and everybody else. So I think it's going to push it out a lot further. I think the other big driver of this market is going to be ETH 2.0. And the reason being is everybody is staking their ETH. It's creating this incredible supply and demand imbalance in ETH, where there's only about 11% of the total ETH supply available. Everything else is locked up for this staking, where people are getting a yield to secure the network for ETH 2.0, or people are just sticking it into wallets. So there's no ETH around and exploding demand from NFTs, DeFi, and other investment, and there's going to be an ETF. So that's a ridiculous setup. But ETH 2.0, again, think of investor psychology. You've staked your coins, you're getting your yield, and ETH 2.0 is going to come out somewhere between March and June, let's say. Well, when it does, you don't need to stake as much because it'll be unlocked. So what you're likely to do is sell some of your ETH to buy a house or do whatever you want to do because you'll have made plenty of money from it. And that will create a market shift. So even though ETH 2.0 is incredibly bullish because it turns ETH into a deflationary asset, it'll be a buy the rumor, sell the fact. So I think all of that means that we're likely to see an extended cycle. And I think it extends into between March and June. And that would be a new phase. And I think that makes sense as the network is seeing deeper adoption and richer adoption. I think, A, the volatility comes down over time, and B, the cycles extend and then the performance lowers over time. But that's okay because we can find the other new network adoption tokens in the space, and they should follow how this all works. So it's all there and available. There's been two things happened in Ethereum that are game changers. One was the EIP 1559, which was the change of methodology with what they did with the gas fees. So gas fees got rewarded to miners, and what they did is reduce the rewards and instead burnt ETH with it, which is kind of like a share buyback. So that meant the supply of ETH was being reduced because of the buybacks. So it went from about 4% supply to about a 1.5% supply of ETH. So now there's not a lot of ETH. And we talked about the other supply and demand imbalance. So obviously the price starts going up dramatically from that moment, which was over the summer. And ETH 2.0 is somewhat more powerful because here they're moving to proof of stake and not proof of work. Proof of work, to remind everybody, is what Bitcoin is, which is to use complex calculations by massive computing power to solve these puzzles that reward you in Bitcoin. That's what mining is. But proof of stake is different. You get rewarded a yield by staking your Ethereum to secure the network. Uses infinitely less energy, but is also very secure and very efficient. And it's going to create a further issue with supply. And what that's going to mean is ETH becomes a deflationary asset, i.e. each year there's likely to be less ETH than there was the previous year. year. And if there's still network demand for ETH, well, then the price rises dramatically. Now, the question is does that bring down the fees of using ETH enough? Probably. But if not, okay, people are going to use different chains because, ETH becomes more expensive to use. But, this is a really, really powerful thing. And I think the ETH cycle is going to be a big driver of everything.